Hello everybody, welcome to another one of my investing videos. My name is Mark, and in this video I'm going to talk a little bit about how much money can you actually make trading weekly options on the day of earnings. So let's take a look at US Steel. If you've been watching my videos, then you know that steel is one of my holdings, and if you watch my video from yesterday or maybe it was a couple days ago, then you know that I bought to open two call options that expired today. They're already expired. They're already past the expiration date, and I'm actually already out of the position. So let's take a look at what happened here. So let's go to my transactions, and I bought to open two $15 call options on US Steel for $36 for a grand total of $80. And then I sold to close those two $15 call options for $56, and I made $103.52. So that's a $23 profit on an $80 investment. So percent-wise, the return on my money is very good, right? 25% return. But before you go jumping up and down, hip hip hooray, look at how good I am at trading options. Let's take a look at what those $15 call options are worth right now. Now, if we go to steel and take a look at what happened, steel went up the moon. It went up 17%, went up $2.49 a share, all the way up to $16.88. And let's take a look at what those $15 call options are worth. So let's go to May the 3rd, and today is actually May the 4th, so this is already yesterday. It's 1 o'clock in the morning. I like to do my videos in the middle of the night. I'm one of those option guys that never sleeps. And let's look at the $15 call option on steel here. And here it is right here. There's the $15 call. The bid is $185. The ask is $194. And it looks like the last price was $194. So let's say $190. Now, let's go back to my transactions here. And let's take a look at how much I actually sold out for. So you remember that $15 call was worth $190. So you can see I missed out on a big payday. Okay, I bought to open for $36 and I sold to close for $56. But you saw that those calls are worth $190. Now imagine if I would have just sold those, let's say at $180. Instead of this 103, you would be seeing 360, and that would have been a $280 profit. But that didn't happen, and I'm going to explain why I chickened out. Now, if we go to the chart here, okay, and let's go to the 5-day chart. This is a 5-day chart, and this right here is today. What happened today, or actually yesterday? Okay, the big old earnings. Okay, now when steel hit this price, this was after hours. It was at about $15.10 a share. Okay, and those $15 call options that I spent $36, when I was looking at $15.10 after hours, I said to myself, okay, what is steel going to do? Is it going to actually go up like this, or is it going to come right back down to earth? And I wasn't sure, because if you look at the long-term chart, steel has been doing nothing but going down. So how was I supposed to know that it was going to do all of this nonsense? That's the hard thing about trading options, and it's the hard thing about any kind of trading. I don't care if you're day trading or any kind of trading that you're doing. When you see a big, long downward trend, and then somehow I'm supposed to believe that those days have come to an end because of an earnings report, right? But that's what happened, okay? So I missed out on a big payday because of that, and because I got the cold feet, because when you buy to open a $15 call, right here, $15 call, and you spend $36, then in order to make money on that $15 call, steel has to go to $15.36 a share. It can't just go to $15.10, because if it does, then this call option will only be worth $10. Okay, but I spent $36, right? And those call options expired in one day. So I don't have the luxury of sitting around and saying, well, I'm going to wait for steel to go up over $15.36 a share, right? So I had a simple game plan that I came up with based on what steel was doing, and based on the earnings, and based on the prior knowledge. So you can say, so one thing you can say is that all of this kind of biased me. It skewed my opinion of what steel might do. And because of that, I missed out on a big payday. Yes, I did make money. I made $23 on my $80 investment. And that's better than losing, right? But I could have made bank. So in the future, what I can do in the future is, instead of selling to close my calls, I can simply buy some put options. Now, look at look at the $15 puts. Okay, so here, okay, here we go. Now, right now, let's go to out of the money, because the puts are out of the money. If we look at the $15 puts that expire in 0 day, are already past expiration, they're worth $0, $1. So when steel was at $15.10 a share, okay, I made the decision just to take the profit and get out of those two calls, okay? But what I could have instead done is, when steel hit $15.10 a share, okay, actually, let me fast forward, okay? When it hit the $15.10 a share, I came up with a game plan that I was going to wake up in the morning, 6:30 in the morning, West Coast time, and if my calls were showing a profit, I was going to take it. I didn't care how big or small it was, because I thought that steel might come back down. You know, it's been on a downward bear trend spiral, and how was I supposed to know it was going to do this, right? So I told myself that I'm going to wake up in the morning, and if steel is showing a profit on my calls, I'm going to get out and I'm going to take the profit. And that's what I did. And the profit turned out to be $23. It would have been so much nicer if I would have made the $290 or $300, but that didn't happen. I took the profit because that was my game plan, okay? Steel after hours was at $15.10 a share, so I was very nervous, very worried that my calls were going to expire. Maybe not worthless, but maybe they'd go down to like 15 or 20 bucks, and I don't like losing money, okay? So that was my game plan, and that game plan that I came up with cost me, okay? So in the future, 3 months from now, when there's another earnings, I'm going to do it differently, and the different way I'm going to do it is, instead of selling to close those two $15 calls, I'm going to hang on to those calls, and I'm going to buy two $15 puts. Now, when steel was at $15.10 a share, those $15 calls, or I'm sorry, those $15 puts were valued at about $15. My memory serves me correct. They were valued at about $15 a contract. So I could have just coughed up another $30, bought to open two $15 put options, and they would have expired on the same day, right? But had I would have done that, then I could have just hung in there, because now if steel does make the pullback and it goes back down to $14.50 or $14, then those $15 puts, if steel goes to $14.50, will be worth $50. If they go to $14, they'll be worth $100. And so, big deal if I lose the $36 on the calls if I'm making $100 on the puts. So in the future, that's going to be how I'm going to tweak my game plan. And so the last thing that I want to say as I close out this video, I am always tweaking my game. I am always trying to up my game. I'm always going back in time, turning back the clock, and asking myself, what could I do differently that I can make that $290 instead of settling for a $23 gain? And percent wise, you know, the $23 making $23 on $80 is pretty good. Making 25% in a single day, that's pretty good, right? But percentages mean nothing to me. To me, it's the dollars that you make. Okay, I mean, if I invest $10 in a stock and the stock doubles, then my $10 turns into $20, and I can brag and say I made 100% return. Okay, but the truth is I made $10 freaking dollars, and 7 of those dollars goes bye-bye to the commission. You know, so percentages and returns don't mean a whole heck of a lot to me. To me, it's the dollars that you make. And making $300 is way better than making $23. So I am always going back in time. I'm always turning back the clock, asking myself, what could I do differently that I could capture the lion's share of that profit and not miss the boat? And I think as an option trader, you must do that. As an investor, you must do that. You must always question yourself and ask yourself, why did I miss this? Why did I make this decision? Because in this day and age, you got nobody to blame but yourself. Whether you're making money or losing money, you can't say, well, the market tanked. Okay, fine. Well, that would be great if you had put options, but you didn't. You made a decision to buy calls or to buy some shares of a stock during a recession, or vice versa. You know, maybe you're a put option guy and the market's rallying and you think there's going to be a recession, but there's not, and the market has been going up. The jobs reports have been very good today, so the market had a good day overall. And you must always do that. Always check yourself and always question yourself so that you can make as much money as you possibly have and you can enjoy the heck out of your life. So that's it for this video. As always, if you have any questions or comments, feel free to leave a comment in the comment section. Feedback is always welcome. Any support or likings or subscribers is always great too. And until the next video, I hope everybody has a good weekend, and I will see you all in the next video. Thank you.